Hi again, I'm Decloet from Bloomberg News, and I'm very pleased to be joined today by Aldo Romani. He is the head of sustainability funding at the European Investment Bank. That's the lending arm of the European Union, and he joins us today from Luxembourg. Welcome. Thank you for joining us.
Thank you very much for the invitation. It's a pleasure to be here.
The EIB was one of the pioneers of the green bond market, going way back more than a decade now. So I'd like you to start there and talk about how that has evolved and the framework has been an approach to green bonds from the EIB has updated and changed over time. So tell us a little bit about all of that.
Well, we inaugurated, in fact, the green bond market in 2007 with our first climate awareness bond. The background was the commitment of the European Union to fight climate change and the energy action plan that saw renewable energy and energy efficiency projects as a key to this objective. Now, the EIB was asked, in fact, to scale up its financing to these areas, and we saw an opportunity on the capital market side to get capital markets involved. And the idea from the very beginning was that it would have an interest for the market if the bank could make itself accountable, not only with regard to the objectives in terms of signed loans that the bank wanted to pursue, but also in terms of the actual deployment of the funds into the economy. As you know, there is always the delay between the signature of a loan and the actual disbursement of the loan into the economy. So we put in place an infrastructure that could provide that accountability, and this required also a fixed set of definition, a clear set of definitions to permit the bank to monitor these flows coherently over time. So this was an idea that, in fact, was a very fruitful one because it introduced the notion that you can report on disbursements, not only on loans, that you can report by policy objective and not only by sector as per prevailing practice. So then followed the financial crisis, but from 2013 onwards, the market got a lot of attention to this segment again because it saw the opportunities ahead. In particular, investors saw the opportunity to add an additional component to this monitoring, which is impact. What is the expected impact from the application of the funds to projects in the economy? And this triggered a series of initiatives, first of all within the Green Bond Principles, this forum of market participants that has debated these issues from the very beginning. And this eventually led to the definition of the essential features of green bonds in the market, but with a gap towards a high degree of precision with regard to what is green and what is sustainable more generally. So this triggered in 2016 the intervention of public authorities, in the first place also the European Union, that decided to reform sustainable finance towards a high degree of transparency and accountability. A number of working groups were created. The EIB was asked to participate as a technical advisor. It contributed its expertise in both capital markets and project evaluation. And the result was a piece of law last year, the so-called taxonomy regulation that entered into force last year, that is in enabling frameworks within which issuers and investors can take initiative in this field by making reference to a shared set of definitions of what is sustainable. And our strategy has adapted accordingly. We have, of course, participated in the course of time in all the initiatives of the market in this area, but the bank has very clearly at the end of 2020 in the so-called Climate Bank Roadmap stated that it intends on the lending side to increase the share of green finance on the total of its new operations in a year to at least 50%. It has stated that it intends to measure the results on this path by aligning the tracking methodology with the framework established by the taxonomy regulation. And this has immediate consequences for the funding side, because the funding side, so when we issue use of proceeds bonds that are linked since 2018 to this evolving legislation on sustainable finance, we are in a position in parallel to the application of the taxonomy to the lending activities of the bank to extend the scope of our climate and sustainability awareness bonds in a way that extends, in fact, that sheds more and more light by reference to these external criteria on what the bank is actually doing. And in fact, we have already indicated to market our plan to align our framework progressively with the EU Green Bond Standard that the European Commission announced also in form of a regulation proposal in July this year.
Sorry.
Yes, maybe additional information on this, because this has permitted us to, last year, to issue more than 10 billion euros in these two products, which was 15% of the total program funding of the year of 70 billion. This year, we have, at this moment, a share of around 18%, which gives you an idea of what on the one side, demand there is for these bonds, and also how we are responding concretely to this demand with a consistent approach on the lending side.
On the issuance side, how has your investor base evolved in recent years?
Well, clearly, sustainable investment is gaining importance all along the spectrum of potential investors. And this is not limited to the, let's say, European distribution basin, but also to other currencies and markets that since inception of this regulation and the promise for a high degree of clarity in this field have been looking at our bonds with increasing interest. So I must say that this year, for example, around 40% of the total that we issued in CABs and SABs was placed in currencies other than our core currencies, which are, of course, euro and US dollar. In fact, we are ourselves starting to classify our interlocutors on the banking and on the investor side for the first time using principles that are shared, and pay a lot of attention, of course, to the attention that these interlocutors pay to the taxonomy regulation. So from that point of view, I would say that this growing awareness with regard to sustainability issues and to the necessity of more clarity for more impact in both finance and the economy are paying off, and they are recognized indeed, and our engagement in this area is increasingly recognized as a competitive edge by investors.
I think you have a sort of modest amount of Canadian dollar bond issuance. Do you have more plans in that area?
Well, this year we have, yes, indeed, issued 1.6 billion of bonds in this currency. Definitely, the interest of Canadian investors is growing for our product, especially because we are one of the few issuers to use to issue use of proceeds bonds that promise one thing, that the proceeds will be allocated only to new disbursements following issue date without refinancing of already existing disbursements. And we have also, in our approach, established practices that permit us to review eligibilities based on new information as it becomes available. So what we are providing investors with is not only, let's say, a picture of what, for example, the expected impact was when a loan was signed, but in the course of time, upon disbursement, we also clarify whether the project has developed in a different manner or whether new criteria have been established. This permits us to redefine the eligibility percentages and allocate on that basis from then on, which is particularly important at this place. So in terms of opportunity of issuance, of course, we would like to issue as much as possible in Canadian dollars. This year, this currency has been the fourth currency, I believe, in terms of our overall funding in these instruments. And I must say that the interest in this currency, similarly as in other currencies, has also developed more and more towards ESG investors. So we issue more of our use of proceeds bonds and maybe a little bit less of our conventional bonds in this currency, which is very promising, of course, for the area I am responsible for.
So over time, the space has evolved so that investors get more information about where their money's going and what impact it's having. But there's also, and I believe you're on record as saying, there's also in a broader sustainability financing space, there's also greenwashing, and there's also stuff that goes on that's less desirable. What has to happen to stamp that out and make sure that investors get the information that they need to assess the quality or the impact of where their money's going?
Well, first of all, I think it's not just a question of, let's say, the negative connotation of the word greenwashing that one should consider. De facto, sustainable investment is a different, is a difficult, challenging subject because of lack of consensus around a number of issues and the different priorities that exist in different parts of the world, for example. So very clearly, as also highlighted by the G20 study and now working group on sustainable finance, it is important to establish a kind of a common language that permits the various market stakeholders to all clarify what their priorities lie, to make them accountable, and to compare them. So the issue that is here is an issue of comparability in the first place. In order to have comparability, of course, you must simplify, because what we're looking for is not just the best possible and probably inachievable set of definitions of technical nature of the sustainability of the economic activities, but rather a set of rules that permit markets to work better. And this is indeed the approach that has been taken, I think, with success in Europe, on board in Europe in this field. So what is needed is that people define a common language by agreeing on the core features of sustainability, by agreeing on core internationally comparable indicators that people can use effectively to make themselves monitorable by markets in their implementation of policies that all should converge, although on the basis of different paths, towards common objectives. So this is what needs to happen. And I would like to underline that the initiatives that the European Union and the EIB have been taking forward in their respective fields of activity have also been thought from the very beginning as initiatives that should foster cross-border capital flows. Starting in 2017, for example, we tried to clarify different approaches by comparing the common principles that the MDBs use to assemble their statistics on sustainable finance with the taxonomy of endorsed green bond project catalog that China had brought to fruition at the end of 2015. And now this work is being conducted, it's been taken forward by the European Union and by China in the context of the taxonomy working group of the International Platform on Sustainable Finance. What is important is to clarify and identify a standard neutral classification system that permits people to clarify the specific features of their standards with regard to those core features, to those characteristics, core aspects of sustainability, and using those indicators that people in the markets can compare.
We've got a minute left, but the EIB does a number of things, from supporting small businesses to larger sort of project finance. How has the demand side from borrowers changed as a result of the pandemic?
Well, clearly there has been also on the lending side a high degree of attention paid to social objectives. So it's not. So there has been a recognition. It's a kind of a knock-on effect that we can witness, going from capital markets and their attention to social bonds and sustainability bonds last year and this year, to also borrowers and lenders on the other side of our intermediary activity. The focus on healthcare services, for example, has been rekindled by the pandemic and has also extended, for example, in the context of our sustainability awareness bonds that are also allocated to healthcare services to the policy objective of universal access to healthcare services, there was the recognition last year that it was necessary also to consider, in addition to the additional criteria, also criteria that would take into consideration situations of emergency, like the one that we are witnessed in countries like Italy, for example, where normally no special, let's say, support from a supranational institution would be needed. So I would say two main recognition. One, that sustainability has a social dimension, also, of course, linked to a series of parameters that change with the change in climate and environmental environment, and the necessity also to develop a structured approach to these issues that are more difficult to quantify, but that equally require a common approach in order for markets to act in an appropriate manner and help the transition or the transformation of the economies on the sustainable path.